Well, thank you, Mira. Thank you for that kind introduction. Hello, everyone. Thank you for joining, ladies and gentlemen. It's been quite intriguing to follow today's topics, and it's certainly even though more interesting for lawyers as intermediaries. I'm a corporate M&A partner and in the international law firm Magnuson, and co-head of corporate M&A and capital markets, and doing real estate transactions as well. And I think it's quite interesting how our role will be in this blockchain technology in real estate going forward. And as intermediaries, we will be one of the cost reduction factors here, and I welcome that. Actually, we can. That's something that will be quite, producing more efficiency to real estate transactions and more accessibility to liquidity and funds. And the three topics we have at hand at the moment is investing in real estate-backed security tokens and some of the opportunities and potential trouble on the horizon. I will be giving 10 minutes, allocating 10 minutes to each of these three topics. And please feel free to raise your hand if you have any comments you want to add. And I would like to start off with you, actually, Andrew. I enjoyed your input quite a lot. And I think one of the things that we're discussing at the moment is real estate asset is $100 million business, and up till now, big, huge, wealthy corporations had access to this and dominated this market. But the whole blockchain technology into the real estate transactions gives a new platform and creates a new marketplace for everybody, for for people in general, and not it's only exclusive to the big corporation. How do you see that going forward in terms of some of the market barriers that you touched upon earlier? Because I see Switzerland and Liechtenstein and other European countries being first movers, and from our neck of the woods, I think Joe just mentioned just before, Scandinavia, Denmark, where I'm based, and Sweden and Finland and Norway, where we have offices, we kind of lacking, we behind. Please, the floor is yours, Andrew, and please, everybody else in the panel, feel free to comment afterwards.
Thank you very much for the question, and thanks for listening to my presentation. I think the first thing to say is that it's just not true that real estate is owned by big corporations. The majority of institutional real estate, big assets, is owned by pension funds and sovereign wealth funds who represent the citizens of countries and not very wealthy pensioners. So the property stock is largely held through these pension fund platforms managed by expert asset managers. They may not be perfect. They may not do the best job in the world. They may charge too many fees, but generally speaking, they are professional and qualified people. So I'm somewhat skeptical about the idea of democratizing ownership of these large buildings and giving these large buildings to the man in the street who is not qualified. He doesn't have a CFA qualification. He's not an investment manager. He doesn't know what diversification is really about. What's so bad about holding these things through professional funds that are regulated and managed by professional people? So that's my challenge really to the blockchain community, the tokenization community, that why is this such a good thing? Having said that, in my presentation, I am very definitely very keen on the use of tokenization in the fund market. So where we already have consumer and investor protection and professional investment managers running funds through some sort of regulated process, I'm really keen that we explore the technology as much as we can. Number one, to help in the initial capital raise, and number two, in helping people get in and out of these funds later on, because they are extremely inefficient. There's no doubt that they don't work very well, these private funds that are holding many of these assets. And I spoke to a guy who was running a European property fund. They'd raised $900 million to invest in European real estate. and he had counted up how many meetings he'd had to raise the capital. And he told me that you can all think about how many meetings you think he'd had to raise 900 million for his fourth fund. So remember, he'd already raised 3 funds. And the answer was 497 meetings, many of which involved air travel to places like Korea. And in a world where we're worried about unnecessary travel and air transport and greening, then this is just unsustainable. And a lot of these businesses just can't keep going by raising capital in this inefficient way. So I'm really keen on this idea of using tokenization as a way of getting into these funds in the first place. So we have now the legal technology which helps you to accept customers, onboard customers. This is done very badly in the real estate industry, and tokenization is a great opportunity to do it better, and simultaneously to let these people get their money back when they want their money back by orchestrating a secondary market. So I'm a big fan of that, and I think if we put all our efforts into that sort of world, then I think all of the other benefits would flow if the demand becomes proven for democratization of individual buildings. Sorry for the long answer.
Thank you. No, I highly appreciate it. Thank you for very diving into in depth of the role of all that, the market and efficiency. Joe, do you have any follow-up comments? Anybody else in the panel with follow-up comments, remarks? If we start off with you, Joe.
Yeah, well, I fully agree that we can look for more ecologic friendly approach, and having more information, have better data. That is one challenge. But I think one other major challenge for tokenizing real estate, most of them think that tokenization is the solution, but I think it's only the front door of the solution. If I'm investing in real estate, I'm investing a large amount of money in an asset. And while I'm investing, I want to be informed. I want to have upkept and accurate information about my investment. And I think creating the tokenization solution is one, but creating the information gathering and management on the backside. Once I have the token, I can be informed, but once I sell it to somebody else, I'm not supposed to have entrance to all this information anymore. So how are we going to organize that? I think this is still, to many of the tokenization solutions that we see, a big challenge to develop this or to connect that. And then we come into a field of real estate that is rather unexplored. Real estate is administered on the backside of a cigar box. That's how we call in the Netherlands about it. Well, we improved a little bit. Now we do it with email and Excel files. But my background is real estate finance. I worked with the largest real estate bank in the Netherlands. And it is striking to see how low quality the information exchange of professional real estate investors is towards large institutions. I think this is one of the major challenges we also have to solve. And this is why I also think we are starting to scrap the surface, but it still will need some time and will need some effort from multiple stakeholders in this field to build together the infrastructure and the structure, the digital structure that we need to make it mainstream.
Thank you. Thank you, Joe. Thank you for enlightening us from your neck of the woods. Paul, and afterwards, Oleksii, do you have any follow-up comments additional to this topic at the moment?
Yeah, just a quick thought about what Andrew said. I completely agree with him that I don't believe that tokenization in the end should be accessible. So where I'm tokenizing a single asset and making it accessible to a retail investor, they still need professional management behind it. So when I don't have a professional asset manager behind it, tokenization just is means to an end, meaning that the asset in itself needs to be quality for the actual investor to get its expected return, which obviously comprises a lot of significant efficient asset management and also the expertise behind it. So this is what I believe is the only way tokenization really makes sense is when you see it from a technological perspective and use it as a means to raise capital faster, have more efficient processes. But in the end, it's still the asset that comprises an investment. And if the asset is terrible, then the returns aren't going to be great. So from that perspective, I believe tokenization will have a significant impact in the future as it has today, but will obviously will be greater in the future. But it's the asset management behind it and the right selection for the right investor groups that will make the huge impact on the retail investor in the end.
Thank you. We have a question that I already, thank you. Just a question that has raised from one of the attendees. And the question is, I will put it forward to you, Oleksii, if you don't mind. The travel expenses of the gentleman raised the 900 million. If someone who would raise 9 million for a real estate tokenization equals 5 travels, can we assume that the digital marketing expense to promote this RE-S2O will be less?
I don't know if it's a rhetorical question or not. I mean, there's, I understand there are a lot of skepticism around these things. Actually, I wanted to share the skepticism of Professor Baum, saying, but I see some other issues with regard of tokenization of real estate. The thing is that what I've seen so far and researching different projects and their models, I found a lot of premature technologies, models, and ideas. The problem is that I didn't see long-term investment strategy for those who want to invest. It's just my question to all of you. Does anyone own any tokens, security tokens of real estate? And do you want to hold it for a long time, for years? This is the problem. There is no model for a long-term strategy because you don't trust, still don't trust, and have a lot of legal considerations. Am I be able to sell it? Am I be able to address some legal disputes? Can I inherit tokens at all? If I lost the private key, what happened with my property right? All these questions are still open, you know. I would opt into better models. I would think, I think that startups must think about this before they go online and propose their offers. This is very important to attract more. Yeah.
If you don't mind me commenting, I think one of the problems in being innovative and making progress here is that the cost of the tokenization cost, the cost of the technological development is all additional cost, because you almost certainly have to retain the traditional processes behind the tokenization in order to protect the customer. So, you know, for example, I chair a fund management business. We would dearly love to be more efficient in the way we raise capital and deal with our customers. But I suspect we would have to continue to operate all the processes we currently operate, and then also give people some sort of digital password to a website that they could then use to inspect all of the information we've got. But that would have to sit on top of all of the processes that are already there. So it's additional cost. And that additional cost is not clearly essential at the moment. It will be, I'm sure, in 10 years' time, but right now it isn't. So it's very hard to find people who are prepared to develop this technology. What we really need, I think, is a big name like a Blackstone or a BlackRock or a Heinz to say, right, this is the way we're going to do this. And then the rest of the world has to catch up. The problem we have at the moment is that the people that are doing this are small brands that aren't well known. And therefore that comes with all the suspicion. We need a big institutional investor to take the lead on this and say, this is the future, we're going to lead it, and we're going to do this properly.
Thank you. Thank you to both you, Andrew and Oleksii, for a valuable input. Moving on to the next topic, if I may, the second topic is creating real estate-backed security tokens. You know, the basic, approach of reaching new investors and engaging traditional financiers. Simon, if you don't mind, my question is, how do you say, I mean, I think Job touched, briefly touched upon that, that this hasn't really reached the Scandinavian market, for instance, but in your book, how do you see the role of regulators and legislators going forward in terms of providing the right ecosystem and platform, and the opportunity for this to break through? I think Andrew touched base upon that, about the big names branding this, but how do you see the role of regulators and legislators to open the path and gateway to this going forward?
Is that question directed to me?
Yes, please.
Okay. Well, we've seen interesting progress, like, for example, the Dutch National Bank, the central bank, already said that the way we're approaching this field regarding a blockchain registration as a property right is the way to do it. There's no legal restriction. It's the way. They're very conscious about Bitcoin and coin providers. They don't want these things, but the way we're addressing, they very much like it, because it's dealing with certain legal and certain verifying problems in the real economy. Secondly, we've seen many judges being affirmative to a blockchain registration as legal proof. Because it's unchangeable information, they very much like it. So instead of you have a notary file, or you have a cash receipt, the blockchain registration is on the same level. You see they're adapting the possibilities, and you see them where they're very conscious about using it as a monetary tool. That they don't like it because of all kinds of fraud and whitewashing and things like that. They very much like it when it's used in the real economy as a proof from the legal side. And that makes us very enthusiastic. And they see the economic benefits because it brings much lower transaction costs. You don't need the verification process of property rights, things like this. Very easy to do. And this is for us a stimulus to go forward. And also we see a lot of pushing, or would you say enthusiasm for the European Union. A lot of things from provincial government, but instead of you use regulators or things like that, they see it's more or less a decentralized approach of regulation. Because the blockchain registration, once it's there, doesn't need a bureaucracy to check it. And I see also from another perspective that lots of costs in the real estate sector are because of certain parts of regulation and control and things like that. And that's also in my last slide. I wanted to say that let's investigate, let's research all those kind of transaction costs, which can be organized differently if I take this approach. And in the same time, we see especially regulators researching their old approach in regard of what can blockchain technology brings us in our processes. And I'm very enthusiastic, positive about the developments that are going on. And that also brings European project in the first stage, because the old world doesn't know how to invest in these kinds of combinations. We need the public money to overcome all kinds of problems, like already discussed earlier in the discussion. So you need your venture capital, more or less, but the venture capitals are not getting in yet. It's the public entities that has to do it. They take the risk at the current moment. And hopefully once also the infrastructure and things like that, so you have your sunk cost problem solved, other parties are coming in. And in the meantime, we're just investing in the infrastructure, and hopefully already in December we have different parts ready to go on in this approach.
Maybe I may add on that. What I like very much from the approach of Simon is that they are focusing on lowering the trading cost, the transaction cost. I think if you compare traditional investing in real estate, You're investing a high amount of money in a single or a few assets. So this actually, if you look to what is the cost for due diligence, if you're about to invest 10 million, it's not strange that you invest more than 100,000 in the due diligence. Well, because you're about to invest a way larger amount into an asset for a longer period. So there's a reason that makes sense. And I think that industry will not really change fast. I think what blockchain may create is putting something additionally to what we don't have at the moment. I think blockchain is automating the process, and we can compare it to the traditional process, but what blockchain is doing by automating the process and the registering of all these rights, we are lowering the transaction costs. And that's the story of Simon. And by connecting rights to fractions of buildings, even smaller pieces as just one building, but also to fractions, we can create high volume trading. And I think high volume trading is not possible at the moment because the due diligence costs, they outweigh the cost of the transaction. What we can create, but it needs time, is to come to entirely new business models where we can do fractionalized investments on small amounts, fully automated. And then the concerns that Oleksii raised, how do I deal when I'm losing my key? Actually, this is less a concern than like you're doing these large amount investments. Because if I'm losing this large amount, it's really a big pain. But if I'm losing just a few euro, well, maybe that's less a concern. And I think this also will lower the threshold and the concerns that we have for applying these new technologies. But we have to try to think different than we do today. And I think that opens the box.
Thank you. Thank you, Joe and Simon. Paul, I noticed during Simon's input that you were agreeing to most of it, and some of it maybe was a sign of you might have a different angle. Is that something that you would like to share with us?
Just a brief thing that actually venture capital firms are actively seeking investments in the blockchain space, especially in the STO space. So we as a firm, we've raised more than 3 million euros capital. So I think there is active demand for that. What I also see, and this is something that I have to slightly disagree with you, Andrew, is that there is big demand from financial institutions to look at tokenization, and they're actually actively looking at it. From what we see is that when you build a platform, and this is what we did at Finexity, we started our own B2C platform at first to make sure that financial institutions out there see that we can do it on a compliant basis, MiFID II compliant, KYC, AML compliant. And once we launched our platform and it actually worked, we had a big outreach from a lot of firms that then came to us and were like, okay, you guys know how to do it. Is there any possibility that we can just use your software to cut our costs? And that way, I think it's quite interesting because yes, it does take a lot of time to reconcile with the FCAs around the world, wherever you want to launch your products and so on. But once you've done it, there really is significant demand from bigger institutions such as large asset managers or financial institutions, corporate banks, and so on that want to move into that space. But as you said, they don't have the technological expertise at the minute. And they also don't want to have the technological expertise. So they're actually looking for third-party providers that will provide the software, but then obviously also support them in digitalizing their processes. So what we've actually figured out over the last 7 months of working with financial institutions is that every single financial institution has their own demands of how to do things. So when we first created our platform, we were like, okay, look, we're going to place our platform into every single bank. And then we started with the first bank, and you sign a lawyer and so on. And then suddenly they're like, okay, but I have this demand, that demand. Can we not do that? So in the end, when it comes to actually implementing software in banks, is that every single bank is different and they all think different. And I think this is one of the key challenges that software providers in the tokenization space will have, because every single one has their own demands. And if you can bring that to a table, but another thing that we usually, and I think this is the only way forward of how tokenization will actually be implemented on a large scale, is that when you set boundaries to financial institutions and you tell them, look, this is the way forward, this is an ERC20 token, we're going to start off with this, We can put certain rights and duties into that, but anything else that you want on top of that, let's talk about that once we've implemented an MVP and this is actually up and running. Because I think we need to work on the standardization sort of thing in the tokenization space. And once that is implemented, then we can think about different layers and things. But it's just that we need to really be compliant to all the rules and regulations. And this is something that still needs to be developed on a European basis.
Thank you. Thank you very much, Paul, for your additional comments on top of what Simon and Andrew also touched base on. We have 4 or 5 minutes to wrap up, and the final topic of this panel is going green, which is quite important, and I don't mind to spending a couple of additional minutes to cover that very interesting and important issue for all of us and our, the next generations to come. And I want to start off with you, Oleksii, if I may. How do you see, the role of this blockchain real estate in terms of the green development?
I'm not an expert in green technologies. However, one of my early attempts in academia were my paper about microgrids and blockchain. It's not about real estate, but it's about energy. And the thing is that it's absolutely great idea to give this technology for those communities who want to be autonomous and who want to manage their relationship within their community, and they do not need centralized providers, players who provide the services to manage their relations within this grid, energy grid. You sell and buy energy, you produce green energy, you sell to your neighbor, and you don't need the big player, national player in the country who provides all these things. And it's here we're talking, and we heard many times this basic idea. This is how we reduce costs. This is about being efficient. You reduce this long chain of third parties within the transaction, within the consumer and the provider. You just shrink this, pass between these two. That's the basic idea. What I believe it works.
Can I add something to that?
Yes, please go ahead, Simon.
Because when it's called green, it's not about energy only. Because if you see at the production process of building materials, which of course has a lot of energy used, it's about the circular economy. It's about how can I make a contract now for future use of the same material, so that these materials don't have to be produced anymore. And if you look at the way the building industry is causing about 45% of all carbon emissions. And if I reduce that by enormous amount of reusing materials and by effectively organizing the legal chain by using blockchain technology, I can save a lot of problems and I can save a lot of greenhouse gases. So it's one way of looking at green is it's not only about sustainability with energy and things like that, but look at the production processes concerned with circularity. And circularity is like an economic circle, is making the circle round. And then you don't look at the brick, I say, you look behind the brick and what kind of identity does the brick have in terms of energy waste, in terms of circularity and things like that. And that is also a very effective approach in this world, how to use blockchain technology.
And I also would like to add something. I think when it is about investing in real estate green, and the number one topic that comes to my mind is the European Green Deal, and then especially the Green Deal taxonomy. This is something rather new. It is a set taxonomy, taxonomy that helps different industries to identify the investment activities that contribute to becoming compliant to the EC policy for the Green Deal. The EC policy, how can we become CO2 neutral continent in 2050? And they identified as the built environment as one of the biggest industries that need to contribute. We have 250 million houses in Europe. We have a large amount of commercial real estate space, and most of those buildings are already existing. They are out there and they're not performing. In the southern countries, it's more how we can we cool them in an efficient way. In the northern countries, how can we heat them? But also when we are going to create building retrofit plans to make them more compliant, the question is, how are we going to use new materials and how can we reuse existing materials so that we create processes that are more compliant? And this is a very complex situation. And what the Green Deal taxonomy, really this should be written in capitals. The taxonomy identifies how investments in new real estate, how can they be compared with other investments so that they are the ones that contribute to achieving these goals. How are we, when we are investing in existing real estate, how can we identify the assets that are the top 15% of contributing assets? What investments contribute when we're investing in renovating a building? What investments contribute to making them 30% less CO2 energy consuming? And when we can somehow identify that, we need to create new data. I think this is where blockchain really is going to be the answer, because it's about a moving target. And it is dynamic information, and how can we capture and supervise that information in a situation with 27 different countries.
Thank you, Simon and Joe, Oleksii. Andrew and Paul, could I interest you in a couple of comments on this topic before we wrap up?
Just one thing very quickly, Sam. I think blockchain is a wonderful technology for enabling the repurposing of a building. So if we can see through the walls and know where everything is, where all the utilities are, and we have all the information about the construction of the building, then we're much more likely to repurpose it rather than demolish it and build something else, which is the biggest contribution I think we can make to greening.
Yes, and that's also the purpose of the digital deconstruction project, and we're dealing with it, making inventories of buildings, making 3D scans, things like that, and to look through the building. And the cost involved to do this can be equal, because reusing brings lots of economic and social benefits. And to price these benefits, blockchain technology is also very useful. We can cover all these intrinsic costs of making a building transparent. And these things, the investments are done now. I think within 2 or 3 years, you already see the benefit, and that brings also new business models, how to look at the building. And there you're absolutely right. And I think in 2021, 2022, we can also show the results of this approach.
Thank you. Paul, final words?
Yeah, just one last thing real quick. Union Investment and Bell Management Consultants, they actually work on a ESG circle of real estate, where they set sustainability factors, and over 30 asset managers have already joined them to analyze their portfolios on a year-to-year basis, to make sure that they actually meet all ESG criteria and so on. So I think we need more of these initiatives in the market, underpin them with the right technology to make sure that long-term wise we have all the ESG factors in place that will then provide a better world in the future.
Yeah, let's connect.
Sure.
Do you have any questions from the audience? Please, this is the time to put them forward if you have any unanswered questions to this fantastic panel. Well, I guess there are no questions, and we are 5 minutes above the allocated time. Let me just take this opportunity and thank all of you panelists with your highly valuable input, and it's been a sincere pleasure and a heartfelt thanks from me to you, Andrew, Paul, Joe, and Simon and Oleksii. Thank you so much for sharing your ideas and views and assessments with us. And I wish you and rest of the attendees a very pleasant rest of the day and program. Thank you.
Thank you.
Welcome.
Thank you.